Please give it up for Tim Gattani, and here we go.
Well, first of all, thank you all for being here. Every year I get to come to one of these conferences. It's so amazing to meet everybody in person. So many people passionate about trading, looking to make that leap, change their lives. And it's just so much more refreshing than talking to screen names in a chat room. I love meeting you guys, and I always leave these feeling so energized, so thank you. Now, unfortunately, last year I couldn't be in Vegas, but I had a good excuse because I was getting married. And I'm really lucky that that wedding even happened, because one of my first dates with my wife, I was explaining trading and explaining what I do and my mindset, and I literally said the words to her, "I'm a short-term kind of guy." So she made a liar out of me, and I'm really happy with where we wound up. But who was in Vegas 2 years ago when I spoke in 2014, or who has seen the video on YouTube? Okay, so a good number of you. And for those of you who have seen it or were there, you will remember that I was giving some of my top tips. And one of my tips was cut losses intelligently. I was stressing the point that cutting quickly isn't always best. I don't want to just get out at any cost. I don't want to chase. Sometimes, if I don't get my execution, I'm going to wait for the stock to come back in my favor. And yes, that can get risky, and there is a very fine line between smart and stubborn. And, I'm giving this speech, and I'm feeling like the smartest guy in the world. I was just coming off of my best month ever in my career. And not 1 week after preaching to everybody, cut losses intelligently, this happened to me. Yeah, Lake, this was a really humbling moment for me in my career. And unfortunately, a mistake I had to make a few times. But this is exactly what makes trading so infuriating, because I just told everybody, cut losses intelligently, don't get stubborn. I'm telling you my key rules, and I can't even follow them. And 1 week later, I take a loss well beyond anything I ever thought was possible. I think my worst loss in my career up until this point was $60,000. So it blew it out of the water. And Lake, the problem was my discipline. There was nothing different about this. I look at this daily chart, and this is nothing I haven't seen 100 times. There's nothing weird about this. It wasn't lack of knowledge that cost me. It wasn't lack of experience. It wasn't a new pattern, that's for sure. It was my lack of discipline. And the problem with trading is that it all comes back to discipline, and that's the hardest thing to control, because your rules mean nothing without them. It can happen to any trader at any time if you're not following your rules. It sounds great to say, I have these rules that protect me, but they don't protect you if you don't follow them. So even 1 time out of 100 can be a disaster. Ask those who were short KBIO or those who were short AQXP, these stocks that had crazy runs from the $2 area to $50. If you're shorting without discipline in a stock like that, your account goes boom really quickly. And unfortunately, a break of discipline, it doesn't even have to be intentional. It could be an honest mistake. And I saw this just earlier in August on UPLMQ, a almost $34,000 loss. One of my very important rules is that I never will hold through earnings. It's a gamble. I don't want to be long through earnings. I don't want to be short through earnings, because I don't know if it's going to be good or bad numbers. I don't know what the market reaction is going to be to that. It's just all one big unknown. So I go out of my way to get out of positions. The day I entered this UPLMQ position, I actually was exiting another trade because it had earnings after hours, and I didn't want to be short still. But UPLMQ, I completely forgot about it, and it was entirely my fault. I had seen a press release earlier in the week about their expected earnings conference call. I had been warned on Twitter by somebody who was saying, oh, I think UPLMQ is going to hold up until after their earnings date. And the day I entered this trade, just totally slipped my mind. I was playing the chart pattern. It was just like any other old trade. It was the daily chart, upper right corner there. First red day after a big run-up. I was just scaling in for a swing. I was going to risk off of, I think, the lower high on that afternoon of the first red day. But overnight, they drop good earnings. It has a huge gap up. It trades on the OTC market. There was no chance for me to get out. I think its first prints that morning pre-market were in the mid-390s, and I was in from a 325 average. And then I made things a little bit worse. I thought about my potential loss. I thought, oh no, this is going to be my worst loss of the year. And instead of following my plan, getting out right at market open, I sat, I waited, I hoped for a pullback, didn't get it, had to chase that morning spike, and got out near dead top. So I got what I deserved, even though it was a completely honest and unintentional mistake. So the key lessons from that one: holding through earnings is a gamble. I mean, UPLMQ could have just as easily put out bad earnings. It could have easily smoked all the longs, paid my short really nicely. I wouldn't have deserved that gain. I mean, that would have been a lucky gain. It kind of reminds me of my EVOK trade that some of you asked me about, a short that I was in probably about a month ago, towards the end of July. And I was building into a short throughout the afternoon on day 3 of a big run-up. I was thinking short sell swing. I was thinking, okay, this is going to be a great swing play. In a few days, I'll cover it up, take my gains. Instead that afternoon, they had an offering, and the stock dropped about 30% within an hour, and I covered up much quicker than I expected. In that case, news went in my favor, but it still was unexpected news. UPLMQ, I mean, like I said, it was an honest mistake, but it cost me. And I thought about the loss. I wasn't playing the chart, and that made the situation much worse. I focused on the wrong factors. So the question you might be asking yourself, because I'm preaching discipline, I'm talking about 99 times out of 100 isn't good enough. So you might be thinking, does trading demand perfection? No, I don't think it does, because we're all human. We're going to make mistakes. We're all going to be there. We're all going to have those times where we're in a trade that is outside of our plan. If perfection was required, nobody would succeed. I make plenty of mistakes, and I'm still plenty successful. Strive for perfection every day, but don't expect it. I know some traders who will make a mistake and spend the rest of the day or even the rest of the week beating themselves up. That gets you nowhere. You need to be able to just put your head down and move on. Get on to the next opportunity. The key question you have to be ready to answer is, when you make that rare mistake, what do you do? And these are the most important trading decisions that you're going to make in your trading career, because that mistake situation could be maybe a slightly larger loss than normal, or if you keep on doing the wrong things from that point forward, you could take that slightly larger than normal loss and turn it into a disaster, like Lake was for me. So some types of mistake situations that I face pretty frequently. One is if I accidentally hold against news that goes against me, just like UPLMQ. Easiest fix for a situation like that is just get the hell out. There was another trade I had back in 2014 when I was early on in my NASDAQ trading. It was the ticker RADA, up from about $1 to $3. I was trying to short it. And then midday one day, they announced earnings. Very unusual for a company to announce earnings midday. I was caught off guard by it. I didn't cut my loss. I rode that thing up to 6. I was down $100,000, and it closed near its highs, and I was holding overnight. That could have easily gapped up to 7, easily ripped to 10. That could have been my Lake right then. I could have lost over $200,000 very easily, but I was lucky in that situation. It gapped down, and I was able to ride it back down and get out of a stubborn trade for only a $5,000 loss. But when that unexpected news hits, it's just so important to get out, because something fundamentally has changed. The market is going to react to that, and especially at first. There's going to be some pretty crazy volatility when a press release hits midday. So I just like to step out of the way. Let that volatility happen, let the market react, and you can always get back in later. There's no point, though, sitting through it, putting yourself in a stubborn situation, a dangerous situation. And even if it does work out like RADA did for me, there's a ton of opportunity cost there. I wasn't able to short when it was up in the 6s, and it really was time. And I probably missed out on a pretty nice gain potential there because of it. Second mistake situation here would be if I take too large of a position. I turn into Mr. Money Eyes here, where usually I just get a little bit too greedy. I'm thinking about the potential reward. I'm focused on the wrong factors. I see a setup, I say, wow, I want to make $10,000 on this. And then I start piling into the position without really thinking about my risk. And next thing I know, when it does come time to cut that loss, I say, whoa, wait a minute, like, I don't want to lose this much. Now, at this point, I've gotten a lot more risk conscious in the past year of my trading. And now I know pretty quickly if I am in too big. Before I enter any trade, I do know where would I cut the loss if this goes wrong. And I try to size in appropriately and make sure that I would lose a dollar amount that I'm comfortable with. Now, if you are in a situation where you are just in too big, if you answer that question, how much would I lose if this trade goes wrong, and that number is too big for your comfort, what do? The first and easiest solution is just immediately downsize. Whether it's for plus a few cents a share, minus a few cents a share, it really doesn't matter. What it's all about is getting that risk back down to a level you're comfortable with so you can make good decisions through the rest of the trade. So I will try to do this. But sometimes that potential reward is just a little too good. Sometimes you want to stay a little more stubborn with your size. Or sometimes in the market, things just happen too quickly. You might realize you're in too big, and all of a sudden the stock has flown against you, and you're at that point where you need to get out. You have to suck it up and take that loss. It might be a little bit bigger than you like, but you need to trust your plan. You need to get out at your risk where you were supposed to, because as bad as this loss feels right now, it's going to feel 10 times worse when that stock keeps going against you. And all of a sudden, that loss you weren't comfortable with has doubled or tripled. And it just opens the door to a very long and scary hold, and you're just crossing your fingers praying it comes back your way. Third type of mistake situation, and really my most common one, is if I don't cut a loss where I planned to. I get stubborn a lot. It happens. Usually when it comes time for me to stop out, I tend to give the stock a little bit of time to test every now and then. I want to make sure I don't get faked out. And it really is silly that I'm so scared about getting faked out, because you can always get back in. I need to keep reminding myself of that. But I find myself in these mistake situations. For example, this chart on the right, this was one I got stubborn in earlier this year, where I was short, I was risking off of the morning high, I was built in right, but in the afternoon it ripped straight up, it went through 840. I kept waiting and waiting and waiting for a pullback to let me out. And I was hoping it would stuff, I was hoping it would fail, but it didn't turn out that way. It just held up, it kept going, and next thing I knew, I was in this stock overnight, and I think the next morning it gapped up and ripped, and I took a much bigger loss than I should have if I had just stopped out at 840. So the solutions for getting stubborn. The first one, probably the most difficult, just cut it. If you just got stubborn, you're probably going to stay stubborn. That's not okay. That certainly doesn't excuse it, but I know it's very hard for me if I realize, oh man, I might be a little trapped, to just take off the trade and move on. I usually want to take the second option, which is waiting for a price correction, where I'm in this short, and like I said, I was waiting for a pullback to the 840 area. That was where I wanted my exit to be. And you know what? In this case, I didn't get it, and that's why option number 2 can get risky, because sometimes you don't get that relief, and you do get stuck. So when those cases happen, when I do get myself stuck, I take option 3, which is I look for a new risk level. I let the chart keep on developing. I let the next spike set its high. And then as that stock is consolidating, I have my new risk point, and it's well beyond where I meant to risk the first time, and it's going to be an uncomfortable loss, but I really make sure now that I do not get stubborn again, because every single bad decision you make after the first one just makes the situation worse and worse. Now, the one thing I will never do in any of these mistake situations is add. I won't try to fix it anymore. This is my new golden rule. I mean, this has made all the difference for me in the world this year, and I cannot believe how long it took me to see it. You always hear the top traders like Tim or Nate or whoever say, don't fight stocks, don't average up, don't average down, don't add to a loser. And I never listened. It just never clicked for me for whatever reason. It really is an adrenaline rush to be in that trade and you're losing money, and then you have that perfect ad, turn that loss into break even, turn it into a win. It feels great. But the times it works do not make up for the times it doesn't. I mean, Lake was a $290,000 loss. PBMD was a $180,000 loss. CANF was a $116,000 loss. And all of these trades, there was nothing special about them. These all started like my normal everyday trades, where I size in appropriately, I have my risk. But then what would happen on these trades is I wouldn't stop out, I'd get stubborn, and then I would dig in my heels and fight. And I would say, well, I don't want to take a loss on this now that I'm down 10,000, so I'm going to add. And I'm going to add again. And before I know it, I've got a position that is way out of control. And it ends like this. It ends with an emotionally devastating loss, a financially devastating loss. And so as soon as I had that aha moment, late 2015, early 2016, I made sure this is a rule I wouldn't break anymore. And you can see my worst loss this year now is UPLMQ, that unintentional mistake. But if you think about my intentional mistakes, my times I got stubborn, like HMNY, I mean, that was my worst loss of the year before UPLMQ. That was $16,000 compared to $180,000 last year and $290 the year before that. I have drastically cut down my losers. And what I really want people to focus on this table is the ratios. If you take Lake, you can add up my 5 biggest wins from 2014, and that doesn't cover my Lake loss. You take my 5 biggest wins from 2015, those barely cover PBMD. This year, my biggest win alone covers my top 2 losses. So those ratios are finally on my side. And that's part of the reason that this year has been a great bounce back year for me, is because I control my risk so much better just from that one simple rule of not fighting. And that doesn't mean I never add to a losing position. It just means I don't add outside of my risk. If your stop point has come and gone, my punishment is sitting and watching. And that might mean, I see a point where I say, oh, this is the perfect short. It's time. Like, I wanna pile in right here. My punishment for getting stubborn is I have to watch. So other mistake situations, I mean, I'm sure others exist. I just outlined the ones that are the most common for me. The question you have to ask yourselves is, are you breaking a rule? If you're breaking a rule, you're making a mistake. Controlling your mistakes by only making one will just do you so much good. So when you're in that mistake situation, when emotions are running high, when you're uncomfortable, just do the right thing. Don't make another. Don't try to fix it. Don't add like I've done in the past, because again, like we just went over, that is what opens the door to the huge disasters. Now, some of you might be asking, did I miss an obvious mistake situation? Taking a trade that didn't work, taking a loss. This is a firm no. There is nothing wrong with taking a loss. Sometimes a setup just doesn't work. I've taken over 1,500 losses since I first started trading. I've still made plenty of money. Losing is a very, very necessary part of being successful. And this is hard for some people to wrap their heads around, but you have to be willing to lose as a trader. You really shouldn't fear them. You should embrace them. Now, to be comfortable taking a loss, there are some factors that go into that. One is that you have to be financially comfortable. You can't have put yourself in a situation where there's just an intense pressure to succeed immediately. You can't come to the market saying, I have to make money today. That mindset is going to destroy you, because every day there aren't good opportunities in the market. Look at today. I mean, it's one of the most boring days I've seen in a long time. I get asked all the time, is $1,000 enough to start? Is $2,000? Is $5,000? I mean, the answer completely depends on you. It depends on your life situation. I mean, I can't answer that, unfortunately. You just have to keep yourselves comfortable. That's the most important thing. If you're not comfortable because of financial reasons, the market's going to eat you alive. Your emotions are going to rule you. Even if you do have a lot of money and you can jump in with both feet, you still want to trade small early when you're a new trader, when you're making your beginner mistakes. I mean, I still make plenty of mistakes, and I'm a veteran at this point. One email I got that I will always remember, this will always stick with me, is a challenge student who emailed me. And they had just joined the challenge 2 weeks before, and they had just started trading. They were completely new to everything. And they had joined with a $60,000 account and told me they had 30 left. And I couldn't believe that, they just didn't know not to trade that kind of size early. $30,000 is so much harder to recover than 1,000 or 2,000. It's so much more devastating in terms of real-world money. So I mean, I know it's exciting, and I know you want to jump in and make money right away, but if you let those early mistakes and those early losses wipe you out to a point that's not recoverable, you're never going to have a chance to succeed. I mean, again, everyone loses sometimes. My 1,500 losses, that's about 30% of my trades. I think a couple years ago, this number was more like a 72% winning percentage. So it's gone down in the last couple of years, which means I'm probably winning it more like a 65% rate now. But my losses are so small and so controlled that I'm still very profitable overall. And I said earlier, don't fear losses, embrace them. And that's because taking a loss as a trader is one of the best things you can do. That's how you control your risk. That's how you feel safe in a trade, knowing when you're going to stop out, knowing how much you're willing to lose, and trusting yourself to follow that plan. If you're in a breakout and that breakout stuffs, it doesn't work, and you have to stop out, what's there to be emotional about? It's, it was a good setup, it was a good try, but it didn't work. Go on and try the next one, but control those losses. Where you get into trouble is if your breakout stuffs and then you don't take the loss, and all of a sudden you double it or triple it. That's when the emotions kick in. That's when I would be frustrated as a trader. Not if I took a loss, but if I made a mistake. One thing now, I guess, is we've talked a lot about losing, and you can't just lose all the time. I say to embrace losses, but that doesn't mean lose 20 trades in a row and slowly bleed off your account. So some things you can do to learn to lose a little bit less. I think trade analysis is one of the most important things new traders can do. It's so important to track all of your trades. You need to be able to answer the question, where do I succeed and where do I fail? And that takes time to figure out. That takes losses to figure out. I've frequently told people about how I blew up my $1,500 portion of my account the first time that I was trading. It was my first 6 months, from May 2011 till November 2011, that was my period where I really struggled. And at the time, I was just trying to do a little bit of everything. I was trying to do way too much. I was new to penny stocking silver. I was listening to some other gurus. And I was just trying to trade every setup under the sun. And none of them I really was all that good at. None of them I understood completely. And I wound up blowing up as a result. I took a lot of losses. But I tracked those trades, I tracked those losses, and I also tracked my wins. And I started to figure out, where am I comfortable? Where do I find my success? Where do I see myself failing? And my big turning point as a trader was because I tracked these trades, because I could answer these questions, I figured out where I was good. I figured out my niche. At the time, it was buying OTC breakouts. It was buying new promotion releases. And I mean, that narrowing my focus down to just those two setups and ignoring everything else is what enabled me to be consistent and finally start growing my account. I do encourage tracking because there can be a big difference in perception versus reality. You might feel like you're losing all the time at a setup or winning all the time at the setup, but how profitable are you overall in it? I tracked my trades for a while back in February and March. I was still struggling a little bit, not too happy with how I was trading. And one of the areas that kind of surprised me in my results was my breakouts. Now, I wasn't at all surprised that I was a losing trader when I was trying to anticipate breakouts, because I've always preached against that. That's never been a part of my strategy. But sometimes I have little lapses in discipline, and I try to do it anyway. And I mean, first of all, I preach against it because I think it's less reliable, and my numbers seem to definitely show that. I won at a 25% rate and lost a little over $3,000 at the time trying that setup. But also, I'm sure that some losses in there were emotional too, because I was in a setup I wasn't comfortable with. Now, multi-day breakouts and then breakout continuation, which I would define as really getting back into the long trade on day 2 or day 3 of the breakout, both of those I won less than 50% of the time. But look at how profitable I am on both of those. And that's because, even though I lost more than I won, I was taking very small controlled losses. And my wins would far outweigh my losses because the risk reward was so in my favor on that setup. So, I mean, if I hadn't been tracking this, maybe I would have been getting frustrated with breakouts. Maybe I would have been saying, oh, I feel like I never win with this. And I wouldn't have seen the reality that I'm actually making good money there. The other thing that tracking can help you identify is whether the problem is with the setup you're trying to trade or with your plans for that setup. I mean, one thing I saw from tracking my trades was that I was making a lot of emotional exits. I wasn't sticking to my plans. I'd be in a trade, and I'd be risking off of $1, let's say. And maybe I'm in at 105, and the stock is dipping. I'm down a couple cents a share. It's consolidating, being choppy. And I either get bored out, or I'm so annoyed with being down a couple cents a share that I take it off. And my support level that I had planned to stick to never breaks down. Later, the stock ramps back up, takes off, does exactly what I thought. So you need to really see, are you giving your plans a chance to work, or are you making that emotional exit because you're getting caught up in other factors, whether it be that boredom or that fear of being down a couple cents a share, the trade not immediately working. Also, I mean, ask yourself, are you often getting tricked out? That is a big factor in identifying whether or not the problem is with the setup or with your plan. I mean, breakouts, again, let's talk about those. If you are buying the breakout and constantly finding yourself selling into weakness, and then right after you sell, the stock reverses and goes the direction you thought, that might tell you that you have a bad plan and your stop loss is too tight. So, even after you get out of the trade, keep watching these setups. Keep seeing what do they do, and did it eventually work out or not. And that can help you modify your plans and figure out where you have to risk off of. Another really important piece of advice, I think, is trading the chart. I want my primary focus at all times to be the chart and the pattern. I want to be trading off of that, not outside factors. I hide the unrealized profit and loss column on my brokers. That was a really big help to me in controlling my emotions because I didn't constantly have those numbers staring me in the face. I mean, back when I was first trading, I would see like, oh, I'm up $150. I want to take this. And that's the completely wrong reason to make a decision. I'm not paying attention to the trend. I'm not paying attention to whether the stock is still doing what I think it should. I'm looking at my profit, and I'm saying I want it. And that's the wrong reason to make a choice. So hiding the unrealized profit loss, and now I even hide the realized profit loss column on my brokers now. Like a lot of times I don't know how much I'm up or down until the end of the day when I finally just like take a look. But I want to focus on the chart, and that helps me do it. Also, don't set price targets. I think a lot of traders, and this included myself for sure, come into the market thinking like, okay, well, cut losses quickly. I won't lose more than 3% on a trade, or 2%, or whatever number you're comfortable with. And I think that's a really wrong way to think about it because if you take that set number into every single setup you try to trade, you're going to be stopping out at a lot of really random points on charts. I want to focus on the chart. I want to focus on key support and resistance levels. So I would say I'll cut my loss if the $1 support level breaks down. And then I'm playing off of a number that matters, and it matters because of the chart and because of the price action. And then I'll determine my size after that risk level has been established. So for sizing in, for establishing that risk, let's say I'm long a breakout and I'm risking off of $1. And I don't want to lose more than $1,000 on this trade. I'm going to be able to take more size if I enter at $1.05 than if I enter at $1.10. At $1.05, I'm risking 5 cents a share. So with 5 cents a share risk, I can take a 20,000 share position. But at 110, that's a wider risk. That's 10 cents a share risk, a $10,000 or a 10,000 share position only. Either way, though, I'm playing off of that dollar support level, and that's what really matters. So, I mean, as much as I might want that 20,000 shares, I'm not going to force myself into that and put my size way out of my control and way out of my comfort zone if I'm not getting the entry I really want. Now, one important thing to think about when it comes to sizing in is don't forget about slippage. And what slippage means is that you're probably not going to get executed right at $1. It's probably going to execute more like 99 cents, 98 cents. So, even if I'm in that situation where I'm entering at 105 and I know that I could take 20,000 shares, I'm probably taking more like 15, 16, 17,000 and just giving myself that little bit of extra room to not execute, exactly at $1. It takes a little bit of that pressure off, and then I'm not getting stubborn for the wrong reasons again, saying I can't sell at 98 because then I'd lose $1,200. So accounting for that really can go a long way. So we've talked a lot about losing so far, and the reason I have focused so much on losing is because I think it's really necessary to know how to lose before you are really in a position where you can win. Losing is what gives you the confidence that you're safe, knowing that stop loss, knowing your size. And the question I get all the time after a big win is, how did you know? Like, how did you know that MGT was going to tank? How did you know EVOK was going to tank? Just insert whatever ticker you want. It's always preceded by, how did you know? And the answer is, I never do know. I don't. I go into every single trade thinking about the potential loss first, thinking about my risk. That's the first thing on my mind. And you know what? If I'm wrong, I'm okay with it, and I'm ready to try again later. MGT is just the perfect example of one of these, because MGT gave me fits. Like, this was one of the most frustrating tickers I traded, because I went into it from the start with the wrong bias. I did not respect the McAfee news. I was trying to short this, I think, probably in the 70 or 80 cent range. And the first time I shorted it, I got a little stubborn and took a little larger of a loss than I had meant to. So I had a really bad taste in my mouth with this ticker from the start. And I took so many losses on the way up trying to short it. But every single time, it was a small loss. Every single time, I really never got seriously stubborn, just that first time. And then after that, I was really good about respecting my stops and getting out if it wasn't working. And that set me up for the big win down the road. I mean, if I liked it short at $2, I liked it short at $3, I loved it short at $4, I had to have it short at $5. MGT, we're talking about learning to lose and actually cutting your losses. And I'm so fortunate that I did on this day right here. Do I have the pointer? Yeah. This is the day before the big tank. And I had tried short a few times this day. My first short, which was really just brilliant, was this short right here at low a day. And that was a little impulsive out of the gate. But I cut that loss. And I can't tell you how many times in the past I've gotten stubborn in that trade. And I rode it all the way up to 5 and had to watch it all day and cross my fingers and pray and hope, like, oh, I really want it to come back down and crack because I'm super uncomfortable right now. And then the next day, when that big tank comes along, I'm so happy to get back down to break even. I'm so happy I'm not holding this big bag anymore. I probably take it off for plus or minus a couple $1,000s, and that's that. And then I really have missed this amazing opportunity right here. But MGT, I cut my losses. I cut the loss on this. I tried up in here on this high and this consolidation, and I cut when it broke past this high a day resistance. And I even had a short later in the day where I pretty much top-ticked it up at 490, and I was swinging this short. I had this awesome short. Like, I added into my winner. I was short 25,000 shares from maybe a 475 average. And I'm thinking, OK, like, this has to be it. It's finally weak. And then the next morning, it gaps up and opens in the 5s. And I'm cutting this loss pre-market, like swearing under my breath, because it got me again. But all of these times, these are all very small losses, a couple $1,000s here, a couple $1,000s there. As it got up into the 4s and 5s, and I thought the opportunity was just getting way too ridiculous and awesome, I was starting to size myself up a little bit intentionally, because I was saying this is one of those, you only see it a few times a year setups. And because I cut all those losses and never got stubborn, when it failed to have the big morning spike after the big gap up this day, when it was churning in here, consolidating, setting lower highs, I built back in. I got myself back up to about 25,000 shares short, had this nice hard crack, added a little more into this pop, and then the bottom fell out. On the way down, I made about $49,000. I reshorted the big bounce, covered into this fade throughout the afternoon, made another 15 or 18 there. I mean, this was my best trade of the year by far, best day of the year by far. And it was all because I was actually cutting my losses. I knew how to lose on the way up. I never got stubborn like I had in the past, and I'm so proud of this one as a result, because it really was where I could see a big turning point in my year and in my discipline. MGT, I was out of it completely by the end of the day. I mean, if I was building in all morning here, I covered it up pretty well into this panic. But this panic happened quick. Within 20 minutes, I think, there were a couple volatility halts. When I shorted this bounce up here, I was very patient. I covered up most of it probably around 3 o'clock Eastern. So I didn't have any overnight, though, and I kind of moved on. That's my style, is I nail the volatility, I nail the move I like, and then I just move on to the next one. I haven't really stayed married to MGT since then. So learning to win, guys, it's so important that you realize this. This is your journey. I know it's really reassuring to have the experienced trader telling you what to do, whether it be in the chat room or by email, but these are decisions you have to make for yourselves. I mean, I get questions a lot about brokers, how long people should study, whether or not paper trading is useful, when they should size up, what they should be trading. I mean, myself, Tim Sykes, anyone really is very happy to offer guidance. I'll tell you what broker has the best short sale availability. I'll tell you what broker has the lowest commissions that I know of. But you have to decide, which factors like that are important to you. Those decisions are yours to make. I'm not walking your journey, you are. Don't try to mimic others. This was one that I kind of have learned along the way. Like I'm Tim's most successful student, but if you look at my trading, I don't trade at all like Tim now. I mean, there are definitely some similarities you can see, but I'm not like an exact little protege who, you'll see my trades and say like, oh, and Tim just made the exact same trade. I think for myself and I do my own thing. One of the first setups that really clicked for me was multi-day breakouts. I pulled that straight from Tim's DVD, Penny Stocking Part 2. But one of the things that I do differently than Tim with multi-day breakouts is I risk differently. Tim buys a breakout, and he likes to see that resistance immediately become support. He wants to see that support level holding. Whereas when I buy a breakout, I like to use a little wider of a risk. I like to look at the last main support level before the breakout occurred. And that's what I'm sizing in for, and that's the risk I'm playing off of when I get in. And I'm just more comfortable with that. I feel like I get faked out less, and that's just, I took that setup, I took that idea, and I made it my own. And that's what I encourage all of you guys to do with gurus also, is, no matter who the guru is, look for what makes sense, look for what speaks to you, but then make it your own. Don't try to just, follow an instruction manual and do it exactly like they would. In general, I think setting goals is not good. I mean, everyone, I think, gets their foot in the door with trading because they're thinking about the potential rewards. They're seeing the traders who have made it, the millionaires, the lifestyles they're living, and it's really hard not to get caught up in all of that. But you're not going to get there overnight. You're not even going to get there in 6 months, probably. It's a really long journey, and you've got to learn to be satisfied with the baby steps that go along with that. I mean, I for a long time, when I was struggling, I just wanted to be green on the week. And then from there, the goals would slowly increase. All of a sudden, I was thinking, okay, maybe I want to make $1,000 this week or $2,000. But the important difference here is that I'm not going into the week with that goal, trying to do everything I can to make that happen and pressing and forcing trades. It was more of like an after the week reflection, where I'd feel like I had a good week if I had made it to a certain number. But the funny thing is, I never started off thinking I want to be a millionaire. I wasn't focused on that end goal at all. I was just taking it one little step at a time. First I just wanted to make money and be successful, and a little bit consistent. And the journey, it's going to have all kinds of obstacles along the way, all kinds of unexpected lessons, unexpected losses, and setbacks that you're going to have to learn to overcome. Adapt or perish, this is another really important concept when it comes to winning, because I'm very fortunate that I started branching out when I did and trying to learn NASDAQs, because we're at the point now where the OTC market is pretty much dead. There is no promoter that I would really buy anymore upon their announcement, and OTC breakouts are very few and far between. That used to be my bread and butter. That was all I traded when I was growing my account, really from $1,000 or the $1,500 to, I was probably only trading those setups up till about $50,000. And then they still were just a huge part of my account growth all the way up to $1 million. I didn't get satisfied, though. I didn't stick to that one area of the market. I have constantly worked to branch out. Now, don't dive in and try to do too much at once. I got myself into trouble when I was a beginner because I was trying to learn 8 different setups and trying to do a little bit of everything. I think that it's great to go in with that narrow focus. It's great to stick to the area where you succeed, but then branch out one setup at a time from there. Once those initial 2 setups that are your niche become very comfortable and almost a second nature, that's when it's time to add a new setup to the arsenal, and then another, and then another. My work is never done. I mean, I'm a successful trader now, but I don't say, okay, I'm successful, so I'm done studying. Like I'm, you know, the market bell dings at 4 o'clock, and I'm out of here. No, I still track stuff. I still look for new setups. I still look for new edges. I'm always working to add something new to the arsenal and to keep adapting. Tracking setups is another very important part in learning to win. When I did transition over to NASDAQs, this was one of the first things I did. I had no experience with NASDAQs. I was completely from the OTC world. So the first thing I did was I just needed an idea. And I asked myself, what do NASDAQs that run big, you know, have a big day 1, what do they usually do on day 2? And I didn't even know what bias I was looking for. I didn't know if I was looking to long or short these. I just was curious. So I started tracking them. I just had a little spreadsheet where I would start putting in all the tickers, you know, that were the top % gainers for the day, or maybe had a good day 2, and I would just ask myself the next day, where do they open? You know, did they gap up or gap down? What was their high? What was their low? Where did they close? And I mean, it's just the most basic of data. It really wasn't anything all that special, but through analyzing that data, through analyzing those numbers, the overwhelming answer I found was that I should have a short bias going into day 2. And I think that's probably part of the reason why I'm such a heavy short seller now, is because the numbers pointed me in that direction. So, I mean, just that one simple question really helped me develop as a NASDAQ trader, and then I got more specific from there. Again, I like to track it actually in a spreadsheet, because there can be a difference in perception versus reality. I like to have those hard numbers in front of me. But I get questions all the time on tracking and, you know, how you should track. The first question you have to ask yourself is, what is your idea? What are you curious about? And then just pull the necessary data points that will help you answer questions about that setup. What would be useful to you? It really always comes back to you and what you need. Now, these setups, I mean, use them as a guide, but don't blindly follow them. I mean, I'm not going to look at data and say that, you know, okay, day 2 of NASDAQs on average fade 5%. I'm not going to go into the next day, short a NASDAQ, and say I'm not covering until it's a 5% gain. I'm still going to take it setup by setup, case by case, and trade each as its own individual thing. You know, I just use that really more as a guide and to help me form my bias. Now, when it comes to services and chat rooms, I've stressed this a bit already, but think for yourself, guys. Don't ask people, what should I buy? Don't ask, you know, is XYZ a good long? Those are the wrong questions to be asking, you know, even if you're asking someone experienced or a guru. I mean, think about, what do you want to buy and why? You know, follow up on your own ideas. And you know, especially don't ask, you know, 90% of people in the chat room, you know, we don't know how successful they are. We don't know how experienced they are. So don't let a chat room stranger tell you what to long, because, you know, who knows if they have any idea what they're talking about. Learning setups and ideas, I think, is the best way to handle services. When I was in penny stocking silver, when I first started, this was the approach I took. I was watching video lessons, and at the time I was so focused on longs, and buying was the area that I wanted to really be my niche. So I would just go through the video lessons and watch any video lesson that was tagged, you know, as a buying video lesson that taught about longs. I used that to get ideas and just ask myself, you know, what are other successful traders doing? And it goes back to that idea of take that idea, make it your own. You know, be you. Don't mimic. Don't try to follow, you know, a step-by-step playbook of somebody else. And please, 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 guys, do not follow alerts. I said please 3 times there because it's that serious. You're not going to get anywhere. I tried it too. I mean, you don't learn anything. You don't make extra money on the side like you think. Really, you just usually wind up chasing alerts. And a lot of times now, if I see an alert really get chased up, I'm short selling. You know, that spike was created from chasers. So what's going to happen when the guru sells? They're going to flock for the exit. So please don't chase buy alerts and be the guy who's buying my short sell in that situation. So just to kind of recap here, what and how I trade. I mean, what I do is I'm just looking for a predictable, repeatable situation. And tracking is what helps me identify those. I have the courage to be wrong every time. I mean, this is a very important part of my trading. My rules keep me safe. My discipline keeps me safer. You know, I trust myself now to take these losses, and that's why I'm OK with being wrong. Remember that being wrong is one thing, making a mistake is another entirely. And finally, I think for myself. When I'm in a trade, I hate getting other opinions, even if it is from someone I really respect. I like to have my plan. I like to have my idea. And if I'm wrong, I live with it. That's fine. But when I start reading somebody's watch list at night, it could suddenly throw me off a little bit if I'm short something and I'm like, oh no, this person thinks it's going to go up, and then all of a sudden I'm second guessing myself. So I try to really avoid all that outside noise and just stick to my gut and stick to what I think is best. So just to wrap up here, guys, it really is not easy getting there. I mean, you're in for a long and tough journey, and again, there's going to be a lot of setbacks, and a lot of losses are necessary, especially early. But it's just part of the process. The most important thing you can do for yourself is stay disciplined. If I want you to take one thing away from this talk, it's that discipline is the most important thing, and it takes a lot of willpower and really a lot of practice, because even here I am in year 5 of trading, and I'm still doing all kinds of work and practice on mine. From point A to point millionaire, it takes a lot of self-discovery. You do have to figure out who you are, what kind of time frames you're comfortable trading, whether you're happy or long or short a stock. And again, losses help make that happen, figuring out where you succeed, where you fail. But really embrace the process, guys. Don't be frustrated that you're not making big gains in day 1, week 1, month 1, because that's just not practical. It's going to take you a while to get there, but the journey is well worth it. It takes time, but you can do it. Thanks. Oh, yeah.
All right, guys, we are a little ahead of schedule, and since we got Grittani up here, I don't want to let him leave. So what we want to do is we'll just do just a reminder on the schedule. We'll do a little bit of Q&A with Tim, and then it's lunch, and then we'll be back this afternoon with Sykes and I back up here. So what do you think, Ben? Should I run around with the mic and have them ask it, or should I just have Tim repeat it, or what do you think is the best method? Okay, all right. So I guess we'll just kind of let Grittani run the show here. Raise a hand. He'll call on you. And then, Tim, just repeat it for the guys on live stream. So.
Okay. Right there. Okay, the question is about UPLMQ and what the Q at the end means. Right, yeah, so, okay, and other letters at the end of ticker symbols. So if it has that 5th letter at the end, different 5th letters mean different things. Q does mean bankrupt. F, I think, means foreign. There's a lot of different letters at the end, and a lot of the time I ignore most of those. But bankruptcies are ones I will play. I usually like them because they go to the OTC market, and they tend to be the ones that are a little more active these days. I mean, back in the day, one of my main traders was AAMRQ, which was American Airlines. And that one, I was probably a little too wild on that one because I would have a big gain one week, a big loss the next. And then that one actually came out of bankruptcy and now is back on a major exchange. And I think trading much higher than it was at bankruptcy prices.
Just a quick tip. You can, if you Google 5th letter tickers, there's like an Investopedia article, there's a NASDAQ article, so you can quickly get up to speed. I mean, Q is going to be the one you see the most, the one that's we're trading. But if you are curious, like the foreigns and stuff like that, they're quick and easy to find.
Hey, I've been doing this quite a while, a couple months. Got a hang of it a little bit. But how do you look at your risk versus reward?
How do I think about risk reward?
How do you kind of analyze that? looking at a stock about to go in?
Well, you know, it's never been a huge part of my trading. I know some traders talk about, oh, I really want to have 3-to-1 risk reward on a trade. And that's not something that's ever been that important to me. Because, you know, what if it's a setup that you're confident you're going to win at 90% of the time? Well, at that point, I'd be very happy with 1-to-1 risk reward. So it's kind of a case by case and just having a feel for your setups. Like, you know, we talked about multi-day breakouts in my presentation. And that's one where, you know, I can't really put a number to it of what my actual risk reward is there. But because I'm only winning 45% of the time, but well ahead in the profit loss column, that tells me that my reward is much better than my risk in that situation. So I guess I kind of just let my results guide me. You know, at the same time, I wouldn't want to be trading a setup I win at 90% of the time if I'm making like $100 when I win and losing $1,500 when I lose. Sure.
Thanks for everything, Gritani. So I had a question more about when you're watching the stock and you're seeing it go up and down and consolidate. You're saying you're feeling the stock. So you want to see strong pullbacks versus a slow pullback, and it makes you decide whether you're going to sell or really add to your position. How did you come to be able to feel that part of dealing with the stock?
Okay. Well, you know, even one step further than that is that if I'm trying to figure out my bias on one of these stocks, the first thing I'm looking at is the daily chart. So it does have to be a very extended daily chart in the first place for me to be thinking, okay, I want that hard crack. And when I've talked in the past about wanting to see that hard pullback, it's not so much during consolidation when a stock is just kind of going up and down and up and down. It's more one of those situations where the daily chart's overextended, it's having a morning spike, it hasn't shown any kind of weakness yet, and then it has that hard pull. So and you know, what is a hard pull? You know, gosh, it's such a feel thing, which is the most frustrating answer in the world, I'm sure. But it does vary from stock to stock. You know, if the stock has spiked from $2.50 to $3, I would consider a pull back to the 275 area a hard pull. You know, something where a big chunk of the run it just had has been wiped out very quickly and probably put some buyers underwater, because then I would think the next pop is pretty likely to get sold into from those buyers trying to escape. Okay.
Hey, Tim. I got a question, I guess. Recently, I know you've been kind of playing around with hard stops. And as far as where you are on hard versus mental stops, especially kind of this low float mania and environment that we're in, I guess kind of your mindset and where you're at using a mental stop on something that, you know, we're seeing these stocks that can just rip through, you know, a level and just continue 10, 20, 30% so quickly. And, you know, where you're looking as far as, you know, maybe readjusting your risk to, you know, a higher point, and your thought process on getting out of a stock that's ripping so quick like that.
Okay, so one of the reasons that liquidity is so important to me and that I like stocks to have big volume is because it does help enable you to be able to get that execution to get out. Now, hard stops, I did experiment with those for a while, and it really was a necessary thing for me. I think February was the month I used them. And it was, you know, I was still struggling with discipline. I was still struggling with cutting losses. So I said, okay, I'm going to take it out of my hands. I'm going to put in a hard stop for every single trade this month. And, you know, I got tricked out a few times here and there, but overall, I've got to say, it was nice not to ever really be twisted and upside down on the position. But at the same time, I want to be at that point as a trader where I can do it myself, where I don't have to rely on that computer. So now, when it comes to hard stops, my attitude really is more that I will use them for a couple of days if I go through a stubborn streak, just to put myself back on track and see myself stopping out of these trades. But I'm still working to that point where I want to be able to get myself out of that without having to rely on the computer for help. And if the stock I'm playing has enough liquidity, I'm really not worried about getting the fill. I will say this with the stops that I do use stop limits. So that way I don't just execute at any cost. Usually I'll have a few cent window where, you know, if my stop loss is 320, I might build a couple cents of wiggle room in there where I'll say, okay, my my trigger price on the stop is 322, but then I put a limit in there so that it won't execute any higher than 325. And that way there's kind of a little tighter of a window in there, and I'll get filled, if not on that first up move, then into the first pullback.
In terms of all the short concepts, for example, just the second rule 201, where they implement where there's no more shorts allowed to be sold at this particular time. So building on that knowledge, when you look at these kinds of things going on in the market, you can go into Yahoo Finance and know exactly how many shorts are in play, short contracts, right? How am I doing so far?
I actually think that information is usually a bit out of date. If you look at Yahoo Finance and it tells you the short interest, I think that only gets updated monthly.
Okay, so now I have a stock I'm looking at, and it's got the SEC 201 rule in place where no more shorts are allowed. Does that affect your strategy in any way? Now, would you go in and thinking about perhaps a squeeze, buying long, knowing that a squeeze is coming, or am I thinking way out?
If a stock got restricted from being able to short sell it, that would be a bit of a case-by-case basis for me, where I would ask, what has the action been up until this point? I mean, if I'm looking at the daily chart and the volume hasn't been anything special and there really hasn't been all that much volatility, I don't think that there would just suddenly be a short squeeze if it goes restricted. Now, if it's a stock that maybe is a low float, has been very active, everybody's trying to short it, and then all of a sudden a bunch of brokers restrict it, then I start thinking, okay, everyone who's shorted this so far, because it's this low float trash that's flown up on nothing in most cases, all these shorts in there are probably going to get bought in because the broker has to close them out. That's a situation where I might start thinking about looking for a squeeze and looking to actually buy and ride it up a little bit. But it depends also where the chart is in the pattern, and if it's near a breakout level, how much overhead resistance there is, things like that. So I like to have multiple factors aligning where maybe buy-ins are occurring and we are near a key resistance break.
In your DVD, you go over how you don't like selling into weakness. What would you consider weakness versus a washout?
Well, I guess for me, my answer is kind of different if I'm talking about a long versus a short. For a long, it depends if it's still within my plan. So if I'm in that breakout trade where I'm risking off of $1, I will sell into weakness in that case if a dollar breaks down. Where I really start to not like selling into weakness is if I don't fill all of it, and now all of a sudden the stock is at 95 cents and I feel like I'm chasing. I really hate feeling like I'm chasing, and that's where I might get into that situation where I sit back and I'm waiting for the stock to have its first rebound back towards 1 and retest, and then I'm taking off into that pop. Now, if I'm short selling, I don't like short selling weakness and breakdowns because I guess I feel like I get trapped in that a lot. And I usually feel like I'm chasing. I guess I would kind of compare it to, if I had missed a breakout, but I say, oh, screw it, I'm going to get in 20 cents higher anyway. Like, I kind of almost feel like that when I'm shorting. I feel like the best opportunity is come and gone. So that's why on a short that's already faded a lot off of its highs, I'm not necessarily going to short potential further breakdown. I'm a lot more likely to wait for a bounce to get me a little bit better of an entry price, because overall I feel the trend is still down, even though it's having a short-term bounce. So the boxing is your way of protecting yourself. Even though you're losing money on the short position, you've got the long position to match, and you're gaining just as much money in that account. Sure.
Hi. Just a quick question. For example, the stock that's trading right now, TPLM, I was trying to figure out what's the shortest amount of time that I can short a stock.
You could short and cover 1 second later if you wanted to. There's really no time limits on it. You really have to worry about being short a stock for too long, if anything, just because sometimes brokers can get a little unpredictable with their buy-ins. But yeah, there's no limit you have to hold for X amount of time before you're allowed to sell.
Yeah, it's keep it. Yeah, if anything, shorting is the shorter the time frame with shorting, the better. Where guys get in trouble is they get too patient. But yeah, you could. I mean, any order, long or short. I mean, you could, if you could, as fast as you can click the mouse, if you can do it in a millisecond, you can be in and out. So,
Go ahead. Okay, so the question is that in a webinar earlier this year, I had mentioned that I was starting to look into dip buying pre-market or right at market open on day one of a potential runner that was gapping up. And if I've tracked that at all and what kind of characteristics I look for. I haven't done any kind of hard tracking on it yet, and it's still an area I'm looking into, but don't have a great comfort with. The main factor I think that I would consider on something like that is I want it to be a lower float stock, so ideally under 10 million shares, even better if it's a float under 5 million shares, because the lower the float, the better the spike potential. But also, I struggle with it because I talked in my speech about how I like to know my risk going into every single trade. And on a lot of these, they can have that quick dip at market open and then rip right back. And I haven't really figured out yet how to build my risk on a trade like that and feel comfortable and stay comfortable. The only level that makes sense to me would be the previous closing price, but the problem with that is that sometimes on some of these bigger gappers, you're talking about using a 20 or 30% risk, which is just way too wide for me. So I haven't tracked it yet, and it's definitely an area that interests me because I would like to eventually get better at catching some of the upward move on some of these big squeezers. Right now, the biggest barrier for me, though, is I just want to figure out how to better define my risk before I get in the trade so that I can be comfortable.
2 questions from live stream that are kind of similar. What do you feel when you are looking to make a trade before, during, after? How they change if you're right or wrong? And the second question is, what do you do when your mindset is all messed up? Meaning, I know you said if you're in it because of income pressure, that's not good. How to change that?
I mean, yeah, how to deal with it if your mindset is all messed up, it really depends for what reason is it messed up. Like for me, if it's messed up because I just took a big loss, usually I follow up a big loss with another stupid loss because I'm chasing it and I want to make that loss back, and then I do something dumb. So for me, after a big loss, the best way to fix my mindset is to step away. Now, if the problem was something more like I felt like I had that pressure, like, oh, I have to make money, like we talked about in the speech, the best solution I can think of is, just, take that time to just start studying, do something else, make some money another way, and come back with a little more in your fund or in your bank account or whatever that will take that pressure off. And yeah, it sucks to wait, but that doesn't have to be wasted time. You still can watch video lessons and watch the markets and pick up whatever you can in the meantime. The other part of that question was mindset before, during, and after a trade. Before a trade, really, I'm just looking for something familiar. One of the setups that I've played, hundreds of times in slightly different variations. So I build my watch lists the night before, usually, and I go into every single morning knowing exactly what I'm looking for. If I'm looking for this stock to gap up and spike into resistance, and instead it gaps down, I know it's a no play, and I just move on. So yeah, before the trade, I'm looking for something familiar. During the trade, I'm really just constantly reminding myself, stick to your plan. Don't get bored out. Make sure you actually stop out if your stop loss does hit. And after the trade, I guess my reflection is more of, did I follow my plan? How do I feel I handled the situation? Did I make emotional decisions? And if I did follow my plan, and maybe I left some money on the table, I'm not going to beat myself up. I'm not going to feel stupid. I'm not going to feel bad about it. But I will maybe, if I see it happen enough times, start thinking, okay, is there something I could be doing better? Start thinking about tweaking that strategy a little bit.
Yeah, just a quick follow-up your question earlier about selling into weakness. Would your MGT win this year, is that considered selling into strength? Is that the correct term for it?
I would consider that selling into strength because when I was entering that trade, you know, both parts of the trade, I mean, when I shorted the bounce after the big crack, I mean, that was definitely into strength because it had just panicked down into the twos, and you know, then it bounced all the way back up into the $4 area. So after that big run up off of its lows, I expected some fade back down. So that was definitely one into strength. But even before the big crack, when it was hanging around in the fives, I wasn't hitting weakness every time it looked like it was about to break down. I wasn't making those emotional sells when it looked the safest, because usually when things look the safest is the worst time to take the trade. I was waiting for little pops, you know, where I could improve my entry by a few cents a share. You know, little spike up attempts that were failing, and you know, yeah, that's into strength also, I guess, because I'm waiting for spikes up to short instead of chasing little dips down.
Over here.
Good morning, Ken Abner. Good morning. Good morning, Ken Abner, 3-month challenge student. Really glad to be here. I have a quick question about reserving shorts.
Sure.
Is it possible and or a good idea to maybe reserve them higher than what you think it may go to actually just reserve it? I think I heard Tim saying something yesterday about reserving shorts. Would that be a strategy as well?
I think I get what you're asking. Yeah, you know, different brokers have different ways that they handle locating shares to short. Somewhere like Centerpoint, usually, you know, it's either easy to borrow or it isn't. If it is easy to borrow, you don't have to worry about how many shares there are. And if it's not easy to borrow, they have a locate tool where you can, you know, pay a fee to get shares, and most of the time it will locate for you. Now, I remember back when I was with other brokers like Speed Trader, and I had to do more what you were talking about, where it was almost like you had to, you know, if you got the shares located, you had to put in an order right away, and that was the way I would handle that. Is I would, you know, if the stock is at $3 and I want to short into a spike later, I might just put in a short sale order with those shares at like $10, and I would never expect it to execute because it's so wildly above the price. But when it was time for me to short sell, I could just take that order at $10 and replace it, and move the order down then to 4 or wherever I really was trying to short. So, I mean, as long as you're not in danger of getting executed, there's nothing wrong with that at all. And it's great to have those shares so that later, if the opportunity does come along, you can use them. I think you would be reserving them from Speed Trader at that point. Like it's like they almost set the shares aside for you. I haven't done it like that for so long, I can't really remember the specifics. But
yeah, if you've seen that in maybe the video lessons and DVDs, the market has evolved a little bit. That was we used to do that with Thinkorswim a lot back in the day too, where they would have a pool of borrowable shares like Interactive Brokers still does. And as long as you had an order, like it could be a $1 stock and you'd have a short order at $10, you guaranteed that you could basically modify and replace that order and get those. Now, the beauty it is, the industry, the penny cheap stocks have evolved, and you just don't have nearly the hassles of getting borrows you used to. It's a lot. Like if you're watching old DVDs or old video lessons, it used to be a pain in the ass to get borrows. It's a lot easier now.
Is this the same story that Sykes was saying that Mike Good had those 10,000 shares of shorting that he never used?
Yeah, Interactive Brokers has, like, if you take those shares in essence, then they have a limited pool. That's how they do it. Yeah, so that can happen.
And I think I understand what you're asking here. Yeah, I mean, it could be very common. I mean, I do this all the time, where I will locate a stock in the morning, and maybe I'll get 10,000 shares, but I never will use them. And different brokers handle it differently. If it is someone like Interactive Brokers, where they have a limited pool, and you can just put in an order to kind of claim those shares well above, you know, that doesn't cost you anything. But if it's a place like Centerpoint, where I paid a fee for those shares, I still pay that fee, whether I short it or not. And there's really nothing wrong with that. I would very much encourage people not to take a trade just because you paid a fee for shares and feel like you have to use them.
So you're paying a fee for reserving the shares rather than you execute
Right. That's right. Yeah, at Centerpoint, that's how they work it. But somewhere like Interactive Brokers, I don't think there's any fee involved when you are putting that order up higher. It really does differ broker to broker.
It does vary. Like again, Centerpoint's one of the greatest brokers for borrows, but you do have to pay to obtain them. It varies all over the place. So one more question, Ben. Okay.
Okay. Hey Tim, can you hear me? All right. I bought your DVD, so I'm very familiar with your strategies. But I guess like the theme is when you see on Profitly, everyone always speaks about that your strategy, that you mostly short the spikes. However, when I was listening to your speech today, you said that you still focus on the breakouts. And I was just kind of wondering, because you really don't hear too much talk about you really in the breakouts, and I just wanted to know if that's still one of your major go-to plays.
And yeah, breakouts really are one of my major go-tos still. I see them less often than spikes, though. A lot of times what happens for me is that a stock will have a big spike, and I'll have missed the buy, so then I'm just waiting for momentum to run out so I can short sell it. But yeah, I still love the multi-day breakout strategy, and the nice thing about that strategy is it's based off of the daily chart. And if a stock has been consolidating and is building up to that major multi-day breakout level, that's not overextension. That's a very coiled chart. And I probably am looking to make 2 plays on it. I'm looking to buy that breakout, ride it up, sell along the way into strength. And then, a day or 2 later, when I feel like that stock is overextended, I'll short that exact same stock. I don't really care that it's the same company. I'm just playing the price action and where it's at in the chart pattern.
Yeah, good deal. I was just curious because I'm a long guy, so I really stopped following for a little while because I can't get the shorts down. So, but that was my question. All right, thanks.
That reservation, again, back to the shorting. How long is that? For the day?
The reservation, yeah, it's for the day. So, since I do it most with Centerpoint, if I do locate some shares, I could use them at any point throughout the trading day.
All right, well, thanks a lot, Tim. Nice seeing you again, man. Give him a round of applause.
My name is Tim Sykes, and I teach people to trade stocks. I am a self-made multimillionaire. So this is the ideal trade that I'm going to talk about. I want you guys to understand every single aspect of this trade.